Welcome to TradeIndia.com. This is John's report is for April the 1st. Well, we got the crossover of magenta below yellow. Midway through the day, it started to begin to get weak. However, still enough of a range here with the white NBI dipping in that all we pretty much did was fill the yellow extreme histogram right there. Came slightly below it, got a little bit of carry through to it to the 76%. Not overly dramatic at this particular point, but dipping below 33 poses more potential risks to long side than we've seen in a while, and especially with the push-up of here, the short interest in the DOC, but cyan moving above and green moving below red. Definitely worth noting. Likewise scenario on the NASDAQ, although we don't see the dip below the 33 level, so that's less of a negative. But a little hard to see right down here, but check out gold rising. So that tends to give a little bit more credence to the ability of the market to stay up. It's just more of a trend moving roll right there. And NASDAQ never had that near extreme setup with the move above yellow or anything like that. The earliest version of it was much further down here at the 13.9 level. From a euro standpoint, of course, hitting that 50%, made a little attempt above it, but closed all the way back again below it. And pivoting right here, not quite below 25, but below 25.50. It's good enough from a weakness standpoint with white NBI crossing above, and so we can expect a little more weakness out of the euro after that brief little jump that it did. From a gold standpoint, still holding right at the 50% level. It's going to continue up. It's just a question of waiting for that pivot that we saw here from magenta rising and that, and orange DOC dipping all the way underneath with the crossover of the green. Those are all bullish indications right there, and particularly at 50%. So above that, easy to be long that setup. Below, obviously, you can be more cautious with it. And from an oil standpoint, bit of an easing off, still above 100. This is just back and forth with that setup, but you can see that NBI white trailing completely, but the magenta fading off a little bit, and so this could be the beginning of the question mark as to whether or not there's going to be some economic activity decline, which might salvage demand. That's one way to do it. You increase the price enough, and people have to cut back, and that could be enough of a cutback to equalize the demand side of it. Of course, that has a secondary element to it, because if you have people decreasing activity, you have lower economic output. Treasuries continuing to rise a little bit, so more interest in them, which causes the rate to dip just a little bit. However, we already can tell that it's a bust of an investment, given the fact of inflation running at what it is versus the rate being offered. Needless to say, people still want safety over the market, and if the market's beginning to, showing signs of weakness through economic changes, then that becomes at least a safe play, even though not much of a help, given what inflation is. Bitcoin, white NBI spiking up midday, and after reaching 50%, once the pivot took place, boom, filled back in. All that's doing is coming back to positive extremes, and that was the low right there, took that one out. So then people will be talking about the gap and filling that space. We'll see how it plays out based on the readings. ETH, another nice day. It's not as much volume today, because you can see that started off moving along in the same situation, all of them corresponding, even the market in general. Just hit that point, and sell algo is triggered, and boom, everything just faded nicely, and it's just a mean reversion for the most part. So the short signal from the 50K, that filled, took another one, and continued lower as well from there. No surprise, I was pretty clean with that reading. There's the 5K, ending the day on a straight downhill note. So that was just all active selling, and that's just because we had gotten a little bit outside of things. And again, it's one of those where people capitulate and say, oh my God, we're not going to get the dip, and therefore they capitulate, and that evens out the imbalance, allowing for the natural move to take place. And that's exactly probably the best reference to exactly what happens with the markets in these cases. It's just a matter of pushing them to the point where it's extreme, and then boom, once you have that equilibrium, then people can flip positions, and that's exactly what took place as the selling filled back middle 4,500. I'm still way above where we were from before. If you look at it from a daily standpoint, I mean, we've had this huge run up, and this is the first beginning. So potential for it is we'll start to look to see whether we move back towards the 43 range, which would be a 50% move. We're still not seeing that level of it from a 50K standpoint, obviously a little bit better. We're going to see the builds back and forth from a 5K standpoint first, so we'll keep an eye out. And that was just, of course, end of the month, and a lot of people just taking advantage of locking in some of those gains and looking good for the month that took place, particularly if they were on that buy side that we caught mid-month. So it was pretty good overall. Still pretty nominal from a retrace standpoint. Indicators have been sent out for April and that, and looking forward to an exciting month. As always, though, trade well. Look for me on Skype chat. Have a good one.